Hello everyone, Kim here. Today is November 22nd, 2017, Wednesday. Happy Thanksgiving to everyone. On Friday, market will be open half day, but we'll skip the market update video on Friday. We'll resume next Friday. Well, hope you guys have a relaxing, long holiday week. And I wish you and your family the best, and I hope you guys had a good week trading this week. Market continues to act very well here, but in this video I want to talk about just kind of my process and how long do I hold, why do I get into a certain position. So it's gonna be how I'm positioned, episode 2. I think I've done episode 1 a while back, and we'll go through some of the positions I'm currently holding and just kind of let you guys know how I am positioned currently, and just kind of, let you guys know how, the process behind all of that. So, Spider here, obviously, so you can see, before, in case, in case you don't know my time frame, I don't do day trading ever. I don't do swing trading ever. I don't ever do anything short term. Everything I do is what we call position trading. So I hold things, 3 to 6 months, 6 months to 12 months. Usually call position, the option positions, I hold that long 3 to 6 months, 6 months to 12 months. And also I'm an active investor, meaning I'm not going to just passively buy and hold 10, 20 years. I'm going to get into certain stocks with shares, and I'll hold maybe 3 to 5 years, something like that, or 2 to 3 years, and then actively manage them. Meaning, it doesn't mean that I'm going to watch them every single day. It just means that if you get to a certain level, if it yields a good percentage of gain, I'm going to close some out, and then I'm going to add more on a pullback, and I'm going to keep writing it. That's what I mean by actively investing, right? So I'm an active investor and a position trader. So and I always buy leaps. I always buy enough time. I usually go 1 year or more when I buy calls. Sometimes a little bit out of the money, sometimes at the money, just depending on the situation. But Spider here, obviously, this is a level where I first accumulated here, calls here and here. And I'm going to go through all the evidence of that. It's easy to just say, hey, this is where I'm long because I said so. But I'm going to show you evidence. And also, if you've been following me on my market update and on my blogs and videos and things like that, and if you are following me, in my blog, then you know what I was talking about. I was talking about this is a good level to, it's a good opportunity to buy the dip. And we've been talking a lot about some of these levels here. So let's go through it here. So obviously, 230.38, this is March 27. Got into calls here. This was a prior resistance becoming a new support, as you can see there. And gap was filled. And I think if you threw a Fibonacci here, this was like 50% retracement zone or something like that. So 233.38 was a first entry, as you can see precisely right here. And then what happened was Spider start to find some ground. We found support here, double bottom support, and then we broke above this downtrend resistance, right? So that's right here. This was April 24. You can see 236.87, and you can precisely see that prior resistance, new support held, and then prior or downtrend resistance, we broke above it with a gap up move on that day, and prior horizontal pivot, and we're staying above it. So that was the level that I added it. My calls there, as you can see precisely, that was that level right there. You see right here. Got a pullback shenanigan. I remember everybody was just freaking out. I remember that, the futures were down some, and then just, bears are coming out, crash is coming. They did the same thing here and then here, and they got faked out. Bears are crying. And then just got back up, and then we start to see kind of a month like this perfect textbook bull flag pattern, which I've been talking about. If you recall my videos, and I think I might have even wrote an article, but right there, so you see, so right there, this is July 27th or July 12th. It's at 243.62. As you can see right there, we had that bull flag. We finally broke out with the gap up. We're finally, getting that good jump start move. That was at 243.62. I added it more SPY calls, and that was precisely right at that vicinity, right? And then market continue to move on higher. Remember we talked, there's a lot of people are talking about this support broken. People are going crazy. I'm like, oh my God, this thing is ready for 232. And I made a video lesson, the deceptiveness of trend lines. And we talked about how this is how market is going to fool a lot of people because it's been too easy. Support. Market do not like that. When market thinks that everybody's figured out, everybody thought that it's too easy. So many people who bought this dip on this gap up, market is going to give you some shake on it, which we talked about. I held through my position, full positions. And then you can see finally broke out, close some, and I'm holding rest here. So, you can see there's this, so this is a kind of overview here, October 5th, 2017. This is an alert setup that goes up for the members. 254.50, as you can see, it starts to rip. I close 1/3 from this accumulation, right? And then after a while, we get a little bit more squeeze to the upside right there. So that's October 20th at 256.56. You can see on that gap I closed half from remaining. So after closing 1/3, half from remaining, and that was that. So now I'm holding still position that I've accumulated back here. So this is kind of how I play. I mean, obviously, when I say market is extended, that doesn't mean it's bearish, but that doesn't mean that I'm going to start adding new position. You see what I'm saying? Do you remember back in March, how many people thought that it cannot possibly go any higher? Well, that's when I tend to like to go long, right? When there's lots of fear. And then when there is this kind of optimistic views, and that's when I start unloading my position. Obviously, benefit of doubt continues to go to the buyers. I want to continue to give benefit of doubt. But we talked about, if you've been following my market update videos, we've been talking about how we are extended on the weekly chart. But that does not mean that I'm going to start shorting it. It means that I'm going to close out some of my positions. And like I said, I practice what I preach. And I've been telling you guys, this is definitely not a level I'm going to start adding new fresh positions for my time frame. But this is a time where I'm going to start to maybe unload some of my positions, lock in some of the gain. But I'm still want to hold some because I don't know. Nobody knows where the top is. Nobody does. When you're in a bull market like this, nobody knows where the top is. And we've been talking about how we need to see this level hold. This level has been holding. So we want to continue to give benefit of doubt. We may come down, retest it, but I'm still holding some of my position on Spider, and I'm going to continue to play it that way. Cisco. So this one is, this is actually very same setup as my Intel. Remember, I've been documenting my Intel positions on my blog. Like Intel, Cisco is breaking out this 18-year base. And so this is where I entered here. I bought calls and shares. And then we gapped up here, and I bought more on that pullback, calls and shares. And you can see it's moving higher. Let's see here. So this was my first entry back in July 19th. 2017 at 3194, 3130-ish. This is a daily chart with some bullish divergence formation, and then this is a weekly chart with you can see the 18-year consolidation phase. I even annotated entry here. So, you can see right there. So this was prior resistance. This is a prior resistance that peak. We're pulling back here and coming down to prior resistance new support level 3130. I felt good about entry at that vicinity. So that's precisely was right here. That's what that is. That's what that was. And obviously, this is why I look at long-term picture, because if you just look at this, it's hard to see where we're at. I mean, everybody's scared that we had this huge gap down on this earnings day, but I waited it. It looks like it was fizzling out. But you can see it gave us that one last scare, that trap right there, made a new low. Before, that was at ultimate bottom, right? That was at ultimate bottom. Obviously, stuff like this is not going to scare me out. Got up, had that gap up. I added it more on a pullback. Remember, I hate breakout plays. So if you would have just kept going higher, I wouldn't have chased it. But because it pulled back, I added a little bit more right there. So you can see 36.16, cleared it. This was November 16th. Adding more calls. on this gap up at 36.16, as you can see right there. So that's precisely right here, 36.16-ish, that level. So now that's how I am positioned on Cisco at this point. Let's go to Qualcomm. Qualcomm, this one's a little bit tricky one, but this was when I got into calls. I bought shares and I added more shares, and I want to tell you why I did that. So Qualcomm here, this was back in January 31st when I got into calls, right? So you can see some of the analysis I've done back then. We got some pullback, pulling back to my last level of fib. This is a weekly chart, by the way. We're getting into the oversold level, and that's precisely that. And we actually did see initial bounce. Pulled back, got back up, and then I added shares there. This was June 1st, so you can see some of the analysis here. June 1st. Yeah, so that's just precisely like this day, right? So that was analysis, and then it actually pulled back, right? So for a while, I want you to know that for a while, my leaves wasn't producing any gains. And at this point, actually, that shares is also losing money. And then what did it do? It also did this, where it faked. This was the ultimate bottom, right? This been happening pretty much all year long, right? It happened on Cisco, it happened on Intel, it happened on the Russell 2000. It pretty much happened most of my position that I was playing at. That's why, we are in a bull market, but it's not always easy to play the bull market. People say something like, if you just keep buying the dip, you'll win. But you know what? Like, when you're playing individual equities like the individual stocks like this, it's not always going to be easy. They're going to give you shenanigans like that. Obviously, I'm not going to get faked out. So I bought more on that, and that gave me opportunity to add more shares. If this thing were to continue to higher, I probably didn't have that opportunity. So sometimes you can turn negative into good, right? You can see this was October 9, accumulating more shares here on Qualcomm. You can see long-term uptrend support, oversold vicinity, and that's precisely what I did at 52.92. And that's right here. That's 52 right here, November, right? Or October. Was it October? Yeah, October 9th. So that's precisely there. Fizzle, some news about Apple not using Qualcomm or something like that, and then some acquisition news, and then just kind of went straight up. So this was where I closed out my 2018 calls, because this is where I accumulated 2018 and 2019 calls. And it was pretty much the value of that. I was losing. I don't know exactly how much also, because I was holding quite a bit of position because I wasn't really paying attention. But I was, the value of that option, the time value, have lost a lot of it. And then with that, with that move, I was able to close out my 2018 calls with 100% gain. And then I'm holding full shares, and I'm holding 2019 calls at this point. So this is how I'm positioned at this point. Twitter, this is a recently acquired position here. This is when I start accumulating Twitter. I'll show you guys why I did that. You can see right here. So you can see right there, 1920, 1935 ish, right? So around 1935, that's when I'll start accumulating position here. You can see this was a gap down, and this was a gap up. So do you see this purple box? That's actually island reversal. You can see that gap down and gap up. So when we had a big good earnings gap up and we saw the huge bullish move, one thing I hate the most in setups is I hate breakout plays, and I despise chasing. I hate it. I don't ever. I sometimes, just once in a while, I do some breakout plays, but I rarely do it because I hate it. So when it started, because I was watching this, you can see I was watching this, so I'm not going to chase it. So next day I saw this, I didn't want to go long here, and then I saw that, I didn't want to go long there. What I thought to myself, this was falling downtrend resistance comes from all the way from the top. So, and this is a gap area from way before, around 2020-ish, 22-ish. So I talked about, you know, with my members that, okay, what I want to see is I want to see this thing falling back. If it continues higher, I'm okay with letting it go. I'm fine with it. There will always be next time. But if you pull back, I'll be ready to pull the trigger. So that's where I start to accumulate position. And then I got my entry levels here. And then I thought to myself, well, you know what? And then I was telling members that if this thing does come down a little more to 1859 to fill this gap, I might buy more. So there was 2 entry levels. And then I started accumulating. It started to getting back up. I added them more, actually. Oops. So that's... So you can see, and then this was that. This was my entry there, and that made it. So this island reversal is still in play. So this right there, this is island. So that's a good signal. You saw that it retested it and became strong support. Buyers protected it, and we see that move to the upside. That's a good sign there. MGM, I've been holding this quite some time now, right? This is I've been holding it since 2000s. You know, what is it? September 2016. Yeah, September, August 2016 here. So this is my first accumulation. September 1st, actually. August, yes. September 1st, 2459. That was the entry there. Clear the downtrend resistance. Finding some, establishing uptrend support. 2459. Accumulate some shares. Got up, came down, tanked. But I bought this dip. At the time, you did a little bit of fib. This was a 50% retracement zone. I think there was like 100 SMA or something like that in that vicinity. So that's, you can see March 10, 2017, added more shares on MGM. So March 10, you can see that's precisely that. Got up, another triple top type of formation. But this is what I'm saying is that when you're in an uptrend, you always want to give benefit of the doubt to the buyers, even if there's a triple top. Look at that. That triple top looked like the MGM was going to correct in a big way, right? No. I want to give benefit of the doubt to the buyer, so I didn't unload any of my positions. Instead, I was watching this that I thought maybe there would be opportunity, and that turned out to be a trap, right? It trapped both bulls and bears because bulls, they got scared, they closed out their positions, and shorts, they trying to short, they got burned. And then we had earnings on this day, so I want to see how it's going to play at earnings. If not, I would have bought somewhere here, but I want to make sure there's no huge gap down, no shenanigans. So I waited until earnings. We had a good earnings on this day, so we shot up. This was that day, November 7th. But like I said, I don't like chasing it. I hate breakout plays. So, I mean, I could have bought it here. It's no biggie, but I want to see on the next day if we could see a pullback. Then I can possibly buy that right there on that pullback. And that's kind of what I did, and played out in my favor. I mean, sometimes it doesn't, sometimes it does, but when it's there, then I'm ready to do that. So you can see right there, so it was earnings day. Next day, it pulled back, and we fuss out on that support right there. This was a trap, and I bought at 32.29. I bought more shares. So keep in mind, instead of getting scared out of this triple top, I understood on long term. I understood we're still in an uptrend. Understood you can see that we're still in an uptrend. We are retesting prior resistance as a new support. So I watched. I saw opportunity. I bought more shares instead of getting scared because there's triple top. Oh my God, I'm going to get out, but I'm going to buy more shares. It looks like this triple top is going to become what? Consolidation. Now this is becoming a more consolidation. So we had that move, digesting for pretty much all year long. And MGM, once this thing breaks out, probably much bigger move is waiting for him, right? KBH pretty much played, bought calls and shares. I closed out my calls here, and then I closed out my shares there. So let's see. So that's kind of how I play right there. So you can see 1607, right? This was back in Tuesday, August 23rd, 2016, 1607. Clear the downtrend resistance, right? So 1607, it's in that vicinity right here, right? August 2016. And then, so you can see shares, and then bought more shares, and then close out 2388. I close out one, actually I closed with half. At 23, it pretty much went parabolic there, so that's precisely that. There's a reason why I did that. Here, I'll show you right there. You can see this is a prior resistance, and yeah, it's kind of got caught off on that email, but you can definitely see that that oscillator is going that overbought. So now I'm still holding full shares. I was actually waiting for this thing to come about 20 to add more, missed that, and then it just kind of went straight up. So, well, if I miss my entry, I'm okay with letting it go. I'm okay with it. If it pulls back to maybe prior resistance or something like that, maybe I'll add more there for next leg higher. But so that's how I'm positioned in KBM. So I'm still, this was, MGM and KBH, I had, a little bit more stronger, more sizable position on it. So, I'm still holding half of the shares. And so I'm just going to keep riding it. Is this a level that I want to start adding? No, until I see a pullback, I won't add it. But if it continues higher, I'll keep riding it to the upside. Interactive brokers, like I told you before that I don't like, breakout plays, but this was one of those things that it was a breakout play that played out. But this one looked very attractive, and I couldn't let it go. So it was too good to pass up, so I decided I was going to do that. So here I'll give you evidence here. You can see July 26, 39.12, July 26. You can see right there. So it's precisely that level. So what really happened? I'll show you guys what happened here. This is actually monthly chart. What really is, you see right there, you got that consolidation after this huge move, and that consolidation happening above that prior resistance acting as new support, and you saw that just huge move, right? Well, same thing happened again. It's kind of like a fractal, right? You got the prior resistance holding above it, and then we got this huge consolidation happening for years. And that 39.12 breakout right there, that was an entry. That was an entry at Interactive Brokers. So you can see that's kind of how I played it. And that's kind of what I did with TRN. TRN, obviously, at the same time, when I bought Interactive Brokers, I also bought TRN right here. You can see it right there. So Interactive Broker and TRN on that stock pick. There's more on that email, got caught off, but so TRN, I bought it on that day, same day, got up here, we had a huge gap up. I actually added it more every time. So I'll get into a size. When you add, I always add less than my original entry, just in case some shenanigans. So I added it here a little bit more, and then pulled back, and then we're kind of getting back up here. It's like, sometimes is, when there's a gap, sometimes it's gap and go, sometimes gap and fade. It's kind of 50-50 scenario, but I always tell myself if it does gap and fade, a lot of times it will come and fill the gap, and then it goes right back up. So TRN doing good here. GM, the way I play GM is I got in both calls and shares. Right here, you can see I got in calls and shares, and I closed out all my calls there, and I got into 2019 calls here, 2017, and that yielded 200% before I closed them out. But I still holding shares, but I want to show you guys why I did that. So we were in this, you can see we're in this kind of channel, falling channel, grinding for consolidating for how many years? 4 years. And then we finally broke out, cultivated higher high, and we pulled back to prior resistance right here. And that was a great entry, right? That's a good entry. Even if it doesn't play out, that's the thing, is that when you're trading, sometimes even the greatest setup don't play out. But as far as, it just, as long as it has a high probability setup, I'm willing to go with it. You know what I mean? So went with that, got up, and then just had a huge move there. I wasn't expecting this kind of big move on GM. So that's kind of how I played it right here, as you can see. And why I closed out here, you can see how we at the top, and then it pulled back. Actually, it wasn't there. It was right here. It was on this top, and it pulled back. Timed it pretty well on that one. Is you can see on this weekly chart. You can see right there, moved up, 45.32, and you can see where I see my oscillators showing the overbought sentiment. And that's exactly same analysis I've done on Intel, which I blogged about. And you can see calls, shares, close some call, close a little bit more calls, and close all of my calls just went pretty much parabolic, right? And so I was actually thinking that if it comes to about 40, I was going to add more. It didn't come all the way to 40, so now I think there's like 50 MA found support at 50. So I'm all out of calls, but I'm still holding shares. So I'll be holding the shares. Keep going higher, I'll just keep writing the share. That's why I like doing both calls and shares. So I do a call, big move, I close out my calls, and then I can keep writing shares if it does keep moving to the upside. And obviously, you guys know that some of the ones that IWM, you guys know how I played it here, which I've been documenting. This is in a public blog. This is how I played it so far. I've been accumulating calls, and that's how confident I was. And obviously, I get it that I don't want to go too crazy, but at the same time, it's just that when I look at certain charts, I feel like it has high probability, and sometimes you gotta go for it. I'm not gambling, guys. I want you to know that I hate gambling. Even if I lose 20 bucks going to casino, I get mad. I'm like, that 20 bucks just go, down the drain. I hate gambling, so don't think that I'm gambling. And none of the traders are gamblers if they don't treat it like that. It's all probability game. It's just when I look at long term, I look at the climate of this market. It was one of those times where I was very, very confident and positive about this small caps where we're going to see a big move. So this is where I was accumulating stocks or in calls, straight calls, and then got straight a big move here, closed out 1/3 there, which I talked about. You can even see when you go to my Twitter, it's all timestamp. You can see right there. You can see 150.13 was that day when I screened it. So even on my blog, I show you all my work. It's now up to part 5. So if you go investigate part 1, 2, 3, 4, 5, it's journaled it every single step of the way. Not only that, there's a timestamp on my Twitter feed, so you can see all my entries. That I'm not just saying things. I'm not just coming on video. I went long here, I closed out here. I'm giving you guys evidence, and then my journal post, on a daily basis. Obviously, whenever I post, I give you guys that update. When I go long, when I go, when I close them out, right? So there's no way I can, there's no way I can fake this, right? So that's why I want to give you authentic way to show you the evidence of my entries and exits. So that's how I'm currently position IWM. I'm still holding sizable call positions IWM. You can see, just do a quick analysis here. So made a big move, consolidation about a month and a half. That's very textbook. This, like I said on my recent journal post, this is a gift. This is because a lot of people was not able to participate in this. So a lot of people are waiting for that pullback, and it pulled back perfectly to prior resistance. I don't know how perfect it's gonna get. This is just perfectly got, and if you do a fib, this is where that first level of fib is residing in that vicinity. We got 50 MA residing in that vicinity. This is a prior resistance and support. We got that gap just filled. I don't know how perfect it's gonna get as far as the level is concerned. This is why you gotta love technical analysis, right? So we had that move, come back. I feel that we're gonna see maybe, I think 157, 160, excuse me, it's my next target. Obviously, you know about Citigroup. Here, how I am positioned currently. This is how I'm positioned right here. Calls, close some, and then added more, right? So again, I'm up to part 5, so you can investigate part 1, 2, 3, 4. I've been documenting every step of the way. It's time stamped when I entered, right? When I closed out, when I enter again at 71.77, it's all time stamped, so you can see right there. So that's how I am currently positioned on Citi. Citi currently, just holding up here. We got that prior resistance, excuse me, and we got that downtrend resistance here. So we're kind of sandwiched between. Let's see if that level can hold. One last one, Intel, and I do have a promo for you guys that expires on Sunday night. Intel, obviously, you guys know, Again, my Intel article is part 5. You can go investigate 1 and 2 and 3, 4 and 5, or 3 and 4. You can see right there why I was not bearish, but why I believe that there was going to be a pullback is coming. And then a 17-year consolidation breakout. Again, Intel, Cisco, very, very similar setup. And this is how I played at Intel. As you can see, calls, share, close 1/3 there. But then I added more and then close. So this is kind of my strategy. You know, I start to accumulate some calls and shares, and then I wait for that breakout. You see what I mean? I hate what, you know what I mean? Because sometimes trying to time perfectly, like how many people do you really think was able to participate in this move, right? Nobody can perfectly time the breakout. But a lot of times when you're trying to go for a breakout play setup where you get whipsawed so many times, right? You said that maybe you go long here on that breakout and get burned, or you know, maybe you're trying to go long on that breakout and they get burned on that. So I hate breakout plays, but I like you know, when I look at a big picture setups, I like to go long a certain level, and then I am very patient, man, when it comes to my trading. That's why I am a position trader, an active investor. I hold through, see a huge move, and I start to closing out. And again, like my GM position, how it just, you know, I didn't have to do much of waiting. You know, like, you know, I started going long here and kind of fizz a little bit and then start get up right away. But, you know, maybe for my, like an Intel position or my Qualcomm, it just needed some time. So that's the thing about it, is that you never know. That's why I always have enough time when I buy these calls, because you never know how long it's going to take before they actually break out to the upside. So yeah, that's how I am currently positioned on these names that I just shared with you guys. Intel looks good for long term. It's just breaking out a 17-year consolidation. Cisco looks the same way. I believe that it's going to come. The new all-time high is coming. I'm not saying it's going to come next year, but it's probably going to come maybe 2 years, possibly 3. So I'm going to continue to ride that to the upside on my shares. You know, Intel, I don't know if I mentioned it, but if this thing pulls back to challenge this gap area, I'm going to look to either add more. I'm going to look to add more for sure if it comes back to retest this gap area. You know, probably add more shares and calls. But what I don't know is if it's going to come to this gap area and then bounce, or it's going to come and fill it and then bounce. I don't know. I don't know how that's going to. What I know is I think it's not going to go any lower than 40. Worst case scenario. I think that's kind of what I'm seeing. It's the worst case scenario. But the problem is I don't know if it's going to come down to 40 before moving higher, or it's going to come here to maybe 43 before moving higher. You see? So that's a judgment call at that time. I'll cross that bridge when I get there, but that's how I am positioned. As I promised, I'm running Thanksgiving promo. This promo will be expired on Sunday night, not midnight, but Sunday night after dinner time. So we got this is 15% premier plan. So you get 15%, obviously usually $300 a month, but $255. So basically, I'll just quickly explain. So you get options, trade setups, long-term stock picks, and then you get updates on when to add or exit. You'll get positions review, special report, and everything else. So basically, every week, and you know, 100% transparency. I'll show you all of my portfolio and everything else. Track record, but every week, you know, what we call a weekend update video, I'll go through long-term market forecast, market sentiment analysis, market stability analysis, so you understand the big picture, where we're going. And then I'm going to go through all of my positions. I'm going to review every single one of them, talk about, okay, what is the next target? What's the next level to add more? What is it doing? What's the sentiment? And then if there's a watch list, we'll talk about it, possibly what I'm going to do next. And then there's some video updates during the week, you know, 1 or 2 times maybe, just kind of talk about the market. It's a much brief video, talk about the market positions. We've got some special report, long-term forecast videos I've done, only for members, video lessons, some books you can download, and basically settings, all of my chart settings. It took 5 years to really master this ultimate setup. It's there to fully accommodate my trading style, right? So I cannot trade this market without my chart setup. So it's very sophisticated setup. There's lots of settings because every single of my oscillators are completely reconfigured. I don't use the standard, and it again, it is there to accommodate my trading style. So so yeah, usually it's $300 a month. It's gonna be $255 a month, and I know I did promo last year and this year. I'm not sure if I'm gonna do promo again. I just, because I want, there are some people who did sign up. There are many people who sign up on regular price. So I want to honor those people. So this might be the last promo that I ever do. So just keep that in mind. So, well, that's it for me. Have a wonderful Thanksgiving holiday. I'll come to you not this Friday, but next Friday, and we'll look at the market. We'll follow up some of these extended indication that we see, and we'll go from there. I'll talk to you next week.